Oh, hey, figured I would do a really quick video outlining the trade I took today and the use of the 1 minute, so to speak, in terms of what I'm looking at. Because I think there might be a little bit of a cause for confusion there, and I don't want to confuse anyone in terms of how I'm looking to enter. So the idea of this trade was pretty simple. If I go to the 4 hour, and as we discussed in the outlook today, basically what I was looking for was a continuation to the downside after reacting to this. We've seen a lot of momentum coming from this level of supply, and we're starting to see follow through to the downside. Yes, I was aware of this as a potential point of reaction, but I wasn't overly concerned because we've already seen the 4 hour fail sweep, and we're pretty bearish overall. And we can see that on the daily chart, especially just basically this. So we were just looking for the exact same price action of last week to take shape this week. So that's why I was pretty confident in the sell. And then we get into the actual setup itself. Let's just get rid of this. So in the outlook, I talked about price coming into this level of supply and potentially looking for a short. If not, I was looking for a sweep of this zone and a tap into this zone to look for a short, or finally the extreme zone to look for a short. But the probability of the extreme didn't seem as likely. Now, of course, if we start to move to the upside, we could sweep all that as internal range liquidity and then continue to the downside, but that's besides the point. So what I seen was price impulsing into supply. And as we always talk about, if price is rapidly moving into a point of interest, oftentimes it's a warning sign not to take a trade unless you see proper confirmation. So when I seen this candle, which is showcasing selling coming into the market, it's not quite an engulfing candle, but we do see a lot of bearish momentum coming into the market. I didn't want to take an entry, obviously, off of this candle because we could have just very easily seen price continue to the upside or something to that tune. So what I wanted to see, or what I'd like to see is, and I tend to draw this pattern to kind of showcase liquidity being swept and continuing to the downside, basically showing that shift in momentum. So if I look at this, we do get sensitivity to the high. We get that engulfing candle, which is essentially the momentum that we want to see in the market. But in this case, I either want to see another sweep of the high and then momentum to continue, or for price to essentially come back into supply and then continue to the downside, especially when we get this rapid expansion into a zone. So if we're looking at that, and we see this next candle, we impulse to the upside, taking out the previous high, so we get that little liquidity sweep. And in the same candle, we see that momentum to the downside, which forms this large wick to the upside. So we have high sensitivity to the upside, so sellers coming into the market. Demand tried to push the market higher, was unable to do so, and then price started to basically close this almost to a bearish candle. So what I said to myself is, if we can break the low of this bearish candle, that's where I would be interested in taking a position. Now, if I expand this out and we'll just swap my charts, I guess that probably makes more sense. We'll look at the 1 minute and just kind of understand the rationale of how I used it, but not necessarily needing it. What I'm looking for, when I'm looking at these momentum entries. So in this case, we have, let's just draw this really quickly. I'll draw it right here. Cool. So let's draw in the bearish engulfing. We're going to change this to template to my bearish candle. So here's my engulfing candle. Let's just change that to a thick black line so it actually looks like a wick. And then we're going to do this. This is going to be my bullish candle. Template, bullish candle. Let's throw on a wick. Let's just make this bigger so then I can hold control. Cool. Make that a little bit smaller, like that. This came up. All right. So this is effectively what we're looking at. I'm looking at price action to break this low to trigger me into the trade. Now, the one thing that I want to see when I'm looking for momentum entries, and it's in the video, but I think there might be a little bit of confusion as to what exactly I'm looking for in that, because, yeah. So what I want to see is when price opens, I want to see price push up, forming that upper wick before we push down. In some instances, what we're going to see, though, is price action do something like this, where we push down, we might break the low. I'm not going to take the trade yet. And this is why I take market executions, why I look for, taking market orders, because we're switching bearish, but we haven't actually created this wick. So let's just put that down there. We haven't actually created the wick yet. And then what happens is we move to the upside, because if we're looking at this and this candle closes like this, for example, we would say to ourselves, well, this just seeing sensitivity to the lows and buying is stepping in. Whereas if now we get to a certain point and then we start to turn and then we switch bearish. So let's just change that to a bearish candle now. I'm going to be looking to take a trade now that we have actually moved up and then we're moving back to the downside. So I want to see this high be printed before I look to actually take the entry. Even if we've pushed down first, I don't just immediately enter on the break of the low. I want to see that candle do basically something like this. If it doesn't do that, then I'm probably not going to enter the trade. And more often than not, when I'm watching these trades, I'm watching the candle as it's, moving up and down in the live market. But sometimes I'm doing other things. I'm, answering DMs or, doing reports or different things that I do on a daily basis. So I might not be looking at the charts completely all the time. So if we look at this particular setup, I was looking at price to break this low right here. And I ended up entering a little bit later. If I draw this on 830. So I'm looking at basically two things. The entry is between two things. I wanted to see the break of this low, and then I was going to execute, basically trading below it. So what I did was when this candle opened, I marked out the open of the candle. So if we look here, this candle is an 830 candle. So it's going to open at, wouldn't you know it, 830. Even though it kind of looks a little weird. Seems to be a discrepancy there. 830. So oh, yeah, I've drawn the wrong candle. There we go. That makes sense. Yeah, that makes sense. So that was an error on my part, but that's okay because it actually might make this trade make a little bit more sense. So my level I'm looking to take this trade at is going to be this dotted black line, which is the low of this candle. That's what I'm basically looking to see price trade under in order to take the trade. But I'm also basing it on this candle here, trading under that to continue and take the actual momentum entry. So what we see is when this candle first opens, we push down. So we're forming this lower wick first, and then we start pushing to the upside. So when I'm looking on the 1 minute, if I've missed something and we're up here, I can see more tangibly that we've come down, and then this is where my entry was, which is basically underneath this and underneath the opening price. I have the wick that I can use, which is this wick right here. I've seen that the candle opened, it went down, it went up, and then in theory, it should be continuing down if momentum is going to actually follow through with this particular setup. And that's essentially how I'm using the 1 minutes to just look at these things. It's more just a visual confirmation because sometimes you don't actually see these candles printing, or you don't actually see the wick printing in the moments because you're doing other things. Each candle is going to be 1 minute, but we're trading the 15 minute, for example. So we can look, and this works really well, especially if you're doing your end of day markups and price actions already happened. And you're looking at, let's take a look at this trade, for example. So it'd be this. So if we look at how this trade came to be, where is the opening price? So this is the 845 candle, for example. So we want to find 845 on the chart here, which is going to be right here. So this is where the market opens. Let's just hide this for now. So if we're looking at this particular entry, we can see that we open with this bullish candle. We push up, we push down and up all at the same time. We open here, we kind of just do both. So we've already created a lower wick, but we want to create an upper wick. And if I'm looking at something like this, probably not what I'm going to be basing my trade off of, but the market's moving so fast. Sometimes that's just the way she goes. And obviously then that's when you are going to use a slightly bigger stop loss. But as we can see in this example, price comes down and then we come up, forming a little bit more of a tangible wick, and then we come down, which, in many cases is not really going to impact your trade too much because, like I said, with pound US dollar, I'm going to use at least a 2.5 pip stop loss. Doesn't really matter. And if you don't do any of this, you would just go, okay, this is 1.3 because we're looking at the wick anyway. And then you go, 1 pip up, there's your 2.5. You'd be fine. The thing that the 1 minute's allowing us to do, especially when we're looking at this trade in particular in hindsight, is we can see we opened, we pushed down, then we pushed up, and then we pushed down, which creates a whole different understanding of how this high wick came into be. Because sometimes you might see candles that push down and then go up, and then push down and then come up like this, and they totally changed the way the actual trade came to be. So the 1 minute can just be useful in tracking how we created that upper wick before we actually got into the trade. And it makes looking at basically end of day markups and reviewing trades make a lot more sense, you know, because if we look at something like this, we're trading the break of this low, for example, and we're reviewing this trade. So far we found all examples that work, but it's not always going to be that case. This is going to be the 9 o'clock candle. So there's the opening price. And we know that if we trade above the opening price, we're creating that upper wick. We do get a little bit of a breakdown. So this might be a situation where if you're looking for that and you trade, you know, something like that and you go, okay, I'm going to use 4 pips, you might get stopped out. And that's just the reality of these types of situations. We don't know how far the price is going to go before we do anything. But if we're looking on the 1 minute, and this is where sometimes refinements can come into play, we see that we break and then, you know, we just immediately retrace, or we just create this little wick sensitivity and then we continue to the upside. Sometimes that can be enough, because if you're just waiting for price to go lower and price hits it, and it probably moved up very quickly and then started to push up, and then we see sensitivity and so on and so forth. So if we're still looking for this trade and the validity of this trade being taken, we can basically just frame the trade up like this. And then what we'll notice when we look at the way this particular setup came into be, we pushed up, we created that high wick, we came down, we interacted with the open of the candle. So price is trying to go bearish, wasn't able to do so. We end up pushing up higher, which is how this wick actually was created. And then we push to the downside. And then, you know, if you want to get really technical and nerdy with it, then you can say, okay, well, how long did we actually spend creating that wick? We created it for about 10 minutes, which means we had about 5 minutes of pushing before this wick actually, or before this candle closed. And that's essentially all I'm doing with the 1 minute, is just using it as another tool to just watch the way these wicks are forming. Because as we said in the momentum entry video, you know, you want to see this lower high wick form before we take this out, and that's what's going to help you frame your stop loss and give you a little bit more tangibility in, you know, framing up these momentum entry trades. So hopefully that helps. Hopefully that clarifies things, and it also just explains the trade that I took today and how I use the 1 minute. Cheers.